Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 22nd of October, and it certainly feels like an October situation here where the market's broken an uptrend line that we have had in place since August. 74.70 the level there on that red line, and below that looking for not only a retest of 73.70 support from last month, but the possibility of rolling down to the floor of that falling February trend channel 71.50 before the current bear phase is over, with the 200-day and the 50-day lines now both curling down. Things are looking rather negative, and we're only really back above that 74.70 level, even beginning to turn this situation around. If you think the FTSE's bad, the DAX has probably been even worse, in the sense that we had that falling trend channel from back in May. We bounced off that there's a couple of times, but then gapped down to end the week below it. So 15,000, the support level there, broken by quite some margin, and now looking for the March support areas. Initial level there, 14,800, which has also been broken, and so it's now down to the March support area, 14,450, and we really want to hope that that doesn't break. Unfortunately, the whole pattern here since the spring has been of a rolling top, multi-tested rolling top, and those triple tests and triple failures at the 50-day line in August, September, and then the final one in October, giving this market a really negative topping look. Only back above 15,000 now on an end-of-day close basis, really even beginning to unwind the post-spring topping action there at the DAX. Moving on to the Dow, and here position not great either. Rising trend channel there since basically this time last year, but the floor of the channel around 32,900 now, and that's where we expect this market to go. That hopefully will provide some support, but if we don't get that, then it is back to the March support area, 31,500. Ideally, we get back above the 200-day line, hopefully in the next couple of weeks, but that's at 33,800. And that feels like it is a long way away at the moment. Moving along to Bitcoin, and here you can see that this is probably the brightest of the major markets that we look at. We've got the 50-day line rising. We bounced off that in mid-October. Good support there recently in the last week at the 200-day moving average, which is now rising 27,800 and or 900 in fact, and above that, looking not only for establishing a range near the 30,000 area, but heading up to 34,000 and the top of that January trend channel by the end of next month, and hopefully a bit sooner than that. The key here is to get back above 34,000, as that's sort of half the peak that we had a couple of years back, so really quite important to get on the right side of that particular level. At this stage, not expecting any dips below 27,000, and ideally we stay above the 200-day line at 28,000. The other markets coming into play at the moment are gold, where you can see that we built on that break of the May resistance line there at 1946. Above that, looking for 2050 at the top of a broadening triangle from back in May as well. We've got the 50-day line rising, so we've got both the 50 and 200-day moving averages rising. The next time they cross will be a golden cross, and we could get that by the first week of November. So sitting pretty there for gold, especially while we hold above the 50-day line around $1,925. But the fact that we've got support above the 200-day moving average on Friday, very encouraging indeed. Looking on to crude oil, and here you can see that the 50-day lines come into play there, around 85.30, and above that we're looking for this market to head up towards $100, hopefully well before the end of this year, maybe even by the end of next month, if we play our cards right and stay above $85. On to the last of the majors here, and it's pound dollar, which I have to say I can't understand why it's anywhere on the right side of $1.20. We've got an uptrend line there, neckline support for this market around now 120.70, so above that still have the chance of retesting recent resistance, October resistance 123.40, and even heading up to the 200-day moving average at $1.2450. But the key here is whether we can hold above 120.70 and avoid a move down to 118.80 at the floor of that falling trend channel from back in June. Moving on to the stocks, and there aren't many, as you might imagine, after the 1.3% fall in the FTSE at the end of the week. Here we've got Greatland Gold, which is actually rising, I suppose, in sympathy with the gold price, hence the inclusion today. Above 6.5 pence, looking for this to get to 7.8, but obviously you can see the main resistance here since May up towards the 8 pence level, so that really is a level to be broken. But ideally with that bullish divergence that we have, and it's a strong bullish divergence line, multi-tested so far this month, we are finally about to have a big turnaround in the shares and maybe head back towards, say, 10 pence by the end of this year. But again, this market has kept on stalling for much of the past year. On to Good Energy, which has been rather volatile, one has to say, between £2 and £2.50 or £2.45. Looks like we'll finally make it now with the 50 and 200 day lines both rising and above the old September peak at 217. Looking for the 260 area initially, and then maybe up to even as high as £3.20 by the end of this year, the top of that broadening triangle from the early part of last year. But the key here, the imminent golden cross for the 50 and 200 day moving averages. Moving on to Harland and Wolff, where even though there was big news on the fundamental front, the shares have risen, but haven't risen maybe as much as they should have. Obviously not a great market at the moment. Unfilled gap to the upside off the floor of that rising trend channel from April. Initial target here, the 200 day line at 14.4 pence, but we're looking for 20 pence well before the end of this year, and perhaps even by the end of next month. On to Intercede Group, which I know is not exactly the most followed stock in town, but unfilled gap to the upside earlier this month, and rising 50-day line and a break of that around 49 pence last week. The initial target here up to 61 pence, eventually up to 75 pence. That could happen by the end of next month. Moving on to Marula, which was obviously mentioned in dispatches in that interview I did with Quinten van den Berg. And here the shares are rising by a third on Friday, but not surprising given how good that interview was. We can see that we're just approaching or approached the 200-day moving average at 9.6 pence. Above that, we're looking for the top of that that falling trend channel rather from back in March at 13.3 pence. Hopefully that'll happen by the end of next month, and ideally we stay above 8 pence now, which was the post-May or post-March support for the shares until that bear trap that we had last week. Metals exploration is next, and here you can see that got a rising trend channel in place since December. Top of the channel heading for 2.7 pence, which we're looking for hopefully by the end of next month, while we remain above the 200-day moving average at 1.8 pence. But nice trend there, even though the shares haven't moved that much. On to the last two, Phoenix Copper the first one, and here we had an end-of-week bear trap reversal from below the March support there at 18.5 pence. The longer we stay above that, the greater the chance of a move up to not only the 200-day moving average at 26 pence, hopefully by the end of this month, but up to 34 pence perhaps by the end of next month, which is a March resistance line projection. The rebound backed by a bullish divergence line, so we had lower prices for the beginning of last week with the RSI holding up strong. Finishing off with Panthera, and here we have a situation where the shares have managed to rebound off the floor of a rising trend channel from March. A little bear trap from below the 200-day line at 6 pence and above 6 pence. Looking for 8 pence or 8.3 pence initially over the next week or so, hopefully up to as high as 12 pence by the end of next month. As you can see, we have had decent bounces off the floor of this channel in the recent past. That's it from me today. More updates during the week.